Why are Medigap rates going up so much in 2025, and what can we expect as far as rate increases in the next couple of years? The last 12 months have had some staggering rate increases, even for Medigap carriers that don't regularly open new books of business. And in this video, we'll look at why it's happening and what you can do about it. It used to be that Medigap rate increases of 5 to 8% per year were normal, and Medicare beneficiaries could plan for those and sustain these smaller increases over time. But let's go through the perfect storm of events in the last few years that have brought about increases that are significantly higher. Increasing Medicare deductibles for Part A and B. Most Medigap plans cover the Medicare Part A hospital deductible, and if you happen to have an older Medigap Plan C or Plan F, those policies also cover the Part B deductible. Well, Medicare raises the rates on the deductibles each year, which means your Medigap policy is picking up a higher dollar amount on your behalf every year. In 2025, the Part A deductible increased to $1,676 from the 2024 deductible of $1,632. That's an increase of $44 that your Medigap policy will pay each time you're hospitalized in a new Part A benefit period. The Part B deductible increased to $257 from $240. So people who may have an older Plan C or Plan F will see their Medigap plan also pick up an extra $17 for outpatient care. While these aren't drastic, the little increases add up over time for the Medigap company, which eventually has to increase rates to cover items like these. Medical inflation and rising healthcare costs. In 2025, medical inflation is projected to rise globally by around 8 to 10% based on several sources like Aon and PwC. These increases are being driven by factors like rising drug costs and increased utilization of medical services. The cost of both new and existing prescription drugs, including the very popular GLP-1 weight loss medications, contribute to the overall rising healthcare costs. We've also seen increased utilization of behavioral health services, particularly outpatient therapy, and increased demand for alternative care settings like virtual doctor visits, which use technology that comes at a price. Then there is the advent of new therapies and technologies, which are great scientifically, but this kind of innovation can also contribute to the rising costs. At the same time, we see the operating expenses for hospitals, clinics, and providers going up, all of which must be recouped in some way from the healthcare consumer. The COVID rebound effect. Many carriers are also experiencing higher medical claims in 2024 and 2025 because of care that people put off during the COVID pandemic. Someone who needed a knee replacement may have avoided during those years that COVID had mask protocols in place, getting that procedure done. And so some people decided not to risk going out to a medical facility and possibly exposing themselves to the COVID virus for surgeries or procedures that weren't life-threatening. Now that the most critical time of the pandemic is behind us, these folks are finally getting around to having those procedures, which has led to higher loss ratios for the insurance companies last year and in 2025. People putting off care until 65. Another trend we have noticed is that people who need cataract surgery or a joint replacement, again, procedures that are not life-threatening, are sometimes waiting to have these procedures once they turn 65, especially if they know they can buy a Medigap Plan G and they will only come out of pocket $257 for the Part B deductible. Many employers have group health plans with high deductibles ranging from $3,000 to $6,000 per year. So if you're 64, you might decide to wait until you have a much lower deductible on Medicare to have that procedure done. This means that Medigap carriers, again, are paying more claims and having higher loss ratios than what they've experienced in the past. Changing state laws. To change Medigap plans in many states, you must go through medical underwriting. Insurance companies count on you sticking with that policy for several years in order for them to get into the black. It is not uncommon for carriers to open up a new block of business at rock bottom rates to gain new clients. They may even lose money on that business for the first few years. But with annual rate increases over the course of a few years, they can finally make a profit. However, in recent years, we have seen more and more states taking away the insurance company's right to medical underwriting for new clients. Most of the states are doing this by enacting birthday rule legislation. A birthday rule generally means that this is a period of the year surrounding your birthday when you can change from one Medigap plan to another without underwriting. While this may seem good on the surface because you can switch plans once a year without worrying about medical conditions, it actually drives the Medigap rates up for everyone in that state. When insurance companies can't use medical underwriting to protect themselves from taking on a policyholder who has very high medical usage, then their only recourse is to raise the rates for all of their policyholders on that same plan. One insurance company actuary shared with us that in birthday rule states, the premiums tend to be at least 30% higher than in states that don't have expanded open enrollment rules like the birthday rule. So if your state adopts the birthday rule, you can expect to see some higher rate increases in the year following the implementation of that rule. What truly worries me is that we may start to see insurance companies dropping out of doing business in those states because they can't remain profitable. And this is what happens when legislators make rules without exploring the long-term impact on the industry which they are regulating. And let's be clear, this is something that could eventually kill the Medigap industry and lead to the privatization of Medicare, where everyone is on a Medicare Advantage plan. At Goomer Benefits, we had record numbers of clients contact us during the last annual election period to switch from a Medigap plan to a Medicare Advantage plan because they simply couldn't sustain these high rate increases any longer. Fortunately, Medicare Advantage plans don't have premium increases mid-year, and many of them have remained at zero premiums for years and years. So this is one of the reasons they have become so popular in recent years. The bottom line is that insurance companies offering Medigap plans have faced some significant headwinds from all of these things. And it most likely means that people on Medigap may expect higher increases than normal, at least for the short term. If you get a rate increase on your Medigap plan, give us a call so we can walk you through your options. We can shop your policy to see if a cheaper premium exists elsewhere. And if that is not an option due to existing health conditions, we can also help you look into options for Medicare Advantage plans, which are generally less expensive but work differently, so they have to be considered very carefully. To learn more about those plans, check out this video next.